There we go. Sorry about that. Actual Windows update. Um, how's everything going? Happy Memorial Day for those of you that care. It's it's me. It is. Slaving away at work. Sorry to hear that. How do we make money this week? There's a lot of ways to make money this week. What's your preferred method for making money? What's up, Hazy? Vix? Ugh. Really? What's your take on the whole IEP Hindenburg squabble? I went over this a couple times this week because people kept asking me. Uh, Icon's old, man. Like, don't get me wrong. In his heyday, he probably shouldn't have been fucked with. That may still be true. I have no desire to get in the middle of a billionaire's dick measuring contest, but the Hindenburg report is very hyperbolic and designed to take advantage of the fact that most investors don't understand what an MLP does or is. Um, Obviously, Icon has a lot of options to squeeze out the shorts if he so chooses. Um, but yeah, he has very little control over what premium to NAV the fund trades at, right? And I went back through their last few filings, and I don't think there's anything there that's highly irregular or suspicious. I think Hindenburg kind of mistimed their report. They would have done a lot more damage if they'd waited for till after distributions had occurred. But other than that, yeah, I don't know. I mean, I'm not a I'm not a big fan of like trying to play it. I buy far out of the money near dated XSP puts and pray. Okay, all right. I mean, that's a strategy. That's kind of it's not going to be profitable very often, but when it is, it might make up for all the times that you didn't make money. I paid for 117 for Nvidia, fired on the money calls, and profited $3,842. How do I do that again? Behind the dumpster is getting quite full. Is this a sign of an intensifying recession? I mean, I think. What do I got? Like 4 weeks left on the recession prediction? Probably pretty close to that. The budget cuts should jump up unemployment numbers, right? I can take a pick with Ryan Cohen, and they tanked his stock. Sure, that's absolutely what it was. Is it too early to jump into your expected price action for SPX this week with positioning, debt ceiling, etc.? The beginning of this week's gonna be fucking crazy, right? Theoretically, a debt ceiling resolution should be what's priced in, right? Because the odds of a default were like 2%. So that would mean that there was 98% confidence that the debt ceiling was going to go through. I still think it can end up being like a buy the rumor, sell the news kind of event. As far as I know, nothing's been put forth to Congress yet. So the earliest we're going to see a vote is Wednesday. It could pass, but there's a lot of pushback. I mean, McCarthy wasn't very successful in negotiating any of the key Republican terms, and uh, Biden gave ground on things that, more progressive Democrats are going to probably be against. So, I mean, there's a chance it fails in the House, although none of them really have any motivation to have it fail besides popularity or, talking points, right? It's outside of the political contest, it's just bad for everyone. I mean, they won't get paid, the value of their assets will drop. So there's a lot of incentive for them to just push it through and do the right thing. I don't think there was ever a situation where we don't see the debt ceiling get raised, right? Like the chances of a default are very slim. A technical default, I mean, that's not off the table yet. It still has to get through the House. It still has to get through the Senate. Obviously, the Senate's easy. The House is the hard part. And we are getting closer to the X date, but the X date got moved, so there's a little time for grandstanding, and I'm sure they'll take advantage of it. Is he allowed to squeeze out the shorts? I thought it was illegal to attempt to effect a short squeeze. Sure, but you can buy back your shares or, dry up liquidity in a number of ways. So, I mean, if that were to negatively affect shorts, that's kind of their fucking problem, isn't it? And yeah, you can squeeze shorts. It's I mean, collusion with the intent to squeeze out a position is manipulation, but I mean, if a company were to do a share buyback or have a better earnings and that squeezed out shorts, that's not illegal. There's a number of ways to do it which aren't technically manipulation. Any bearish catalysts this week? Oh yeah, we have labor data this week. We have, the debt ceiling possibly not panning out the way people want it to. Which is, going to be the prime focus probably for this week. I think we have ISM PMI, we have JOLTS, we have unemployment, we have non-farm, couple Fed manufacturing indexes, at least one. I think there's a couple more speeches. But yeah, all the payroll data, all the labor data is going to be this week. $99-page bill was released. Okay, so yeah, earliest they vote is Wednesday. Unless they got the wait, if they got it today, then the earliest they vote is Thursday. It's 72 hours committee review. The ceiling squabbling is just grandstanding. It won't happen. I agree. I see no reason for them not to pass it. Although the passing of it is not, bullish, right? I knew we went over it a few times this week, but could you elaborate on the effects on the indexes of the Treasury issuing securities to top up the TGA? Yeah, it's going to dry up liquidity like crazy. Yields are going to skyrocket because the Treasury needs to go out and grab big fistfuls of cash and stuff it into the Fed. Um, Yeah, the more securities they issue, the more they're going to drive down bond prices, and the more they're going to drive up yields, which is going to make yields significantly more attractive than equities. I mean, technically, yields are already more attractive than equities, and they have been since the beginning of this year. Do you see a sell-off happening towards the end of this week? I'm trying to get out of underwater June spy pits. Well, the pump that we saw on Friday was mostly diminishing by the end of the day. We started to see, VIX going up on rising prices as longer and longer dated uh, long puts were being purchased. We started to see short puts on the chain closing up. They're not entirely gone yet, but they did diminish in quantity. Um, all of that should be bearish over the long term. I mean, these pumps don't usually last very long, right? They're generally like 1 or 2 days, maybe three, and then they kind of collapse. At this point, what is needed for Nvidia to have sustained downs? Magic? I mean, it's done nothing but gone down since its earnings, right? It's still down from its high. I don't know, more short call sellers. Any significant downside on Nvidia is going to be met with a lot of fear, right? Because people bought it at prices that are significantly over any near-term valuation. So any major shift in sentiment, I mean, it's a bubble at this point, right? So I think people probably should have seen that on the first earnings, but there's definitely a lot more discussion of it now that Nvidia is trading at a trillion, almost $1 trillion market cap. With the eventual passage of the debt ceiling and more Treasury selling, could we finally see below 4K on SPX? I mean, with sector shift and the pullback in liquidity, it's possible. Yeah, I mean, I would say on the extreme end, like 5 to 10% for provided the Treasury issues like $1 trillion worth of securities. On the low end, like 3 to 6%. And we're probably somewhere in between those two. There's going to be a move to like defensives and durables, manufacturing and industrials, with the Treasury pumping up yields. Those are going to be more attractive than growth, and we'll see sector shift occur over time. Hello, just came in. Nvidia upgrading in-car experience with AI, streaming, and advanced safety features. Cool. So even though the deal was made, there's still a possibility that it doesn't get passed by Congress, a slim one, which could result in a technical default. Sure. I think the odds of that are extremely small. I mean, the outcome of this situation is not bullish. It's not something that you need to like fear, right? The outcome is that the Treasury issues securities and massively dries up available liquidity on the market, right? So the faster we get to that part, the better. Political grandstanding right up until the X date and then passing it anyway is just going to create more volatility. Nvidia also filed an amended S3 regarding their shelf offering. Yeah, they increased it from 10 to 20 billion, right? If I'm not mistaken, I think I saw it. It doesn't appear that they've issued any of their shelf offering yet. Now's probably a great time to do that, given that 10 years of valuation's already priced in. I'm looking at picking up more BTU. Would you CSP or entry, or just purchase at these prices? I just want to know your thought process. Probably a mix of both. I do want to add some more BTU. I want to add about 2,500 more shares. So I might sell CSPs staggered out for, you know, probably all of that, and then kind of wait out the price action and buy if it starts pulling back from this dip. So like if my CSPs are going to expire out of the money, then I'll just start buying stock. Also, is it time to get back into cat? Hmm. I might be getting there. Cat's still very index exposed though, so I'd probably still wait. I know they're discussing getting more cash for their shareholders right now. Possibly an increase in their dividend, maybe a share buyback. So I wouldn't say that's out of the question for this year. If you wanted to go long cat, I would probably still look at prices under $200 to try to get in. Um, if there is any kind of significant correction, though, it could drive a lot lower again. It's very index exposed between S&P and Dow. So if the indexes pull back, regardless of cat's valuation, it'll lose value. So that big open downside you see there, it's very possible for cat to fall to those prices still. Okay, mass spectrometer and Carl are fighting. If the 2-year goes past 5% or further, does JPOW have to just keep increasing rates until the 2 years under control? No, I mean the 2 years already been past 5% this year. Why did you laugh when you said passing the bill is not bullish? Because people think it is. That's kind of ironic. Its the initial reaction to it can be bullish too. What does the Fed issuing securities mean? How does it make the market more illiquid? Well, because money is going to go to buy those securities. That they sell bonds and T-bills and U.S. debt, which lowers the prices of those securities because it's dilutionary, right? And that raises the yields, which makes them a more attractive investment than what's currently being offered as, the baseline growth for the SPX or for NASDAQ or for Dow. And in the issuing of those securities, they then obtain cash, right, which they deposit with the Fed in order to pay their bills. So it's the mechanical action of creating debt. They should have increased the offering in line with their market cap. Probably, but I mean, they have a decent amount of cash already. They released like 3 PR stories about partnerships this weekend after doubling their shelf offering. Rug incoming, hopefully, maybe pump first. With the June puts running into faster theta decay, do you think rolling to July 21st will strike above 4,000 is a relatively conservative approach for holding to catch a good drop on the index? You could go out that far. There's also the end of quarter expiration, which is getting a little bit better for liquidity as we approach like OPEX. So the June what is it, June 30th contracts where the JPM collar is, those are starting to get a little bit more liquid and the spreads there are tightening. So but yeah, I mean, plenty of interest in the July 21st expiration as well. Just remember, when we do get those 200 basis point drops like we had last week, take your profits, at least some. If you leave some runners, fine, but capture the profitability of the downside. It's been short-lived recently, right? We've had a few 200 basis point drops, and if you guys are positioned to the downside, everybody should be making money on those, at least some. And then, frankly, you should probably also be making money on the upside moves. They're ridiculous and consistently, uh, they're consistently like over 150 BPS, right? So, I mean, you could pretty much enter these upside moves at any fucking point out of the money, targeting like the wherever gamma is concentrated on the chain, and you're gonna see that price or slightly higher. So I mean, I don't want to say it's free money, but it's a pretty fucking easy chase. Is there a good likelihood that JPM 3885s go in the money or at least close? I think if we get anywhere near them, there will be a push for them. I really don't think that they're close enough to the money to go in the money right now. I really don't think any like upcoming downside is sufficient. I mean, even if we factor in like the TGA refilling, right, and we see, let's say like a 400 or 500 BPS drop, let's go like in the middle of the range, right? That puts us around 39.95. Um, if we saw 39.50, which is about 6%, then yeah, I think every short in the market would push to get it under the JPM collar. Just because I mean, it's so much fucking delta, right? But I think if we don't get to 39.50, that pushes a lot harder. So it's uncertain. When a tier halt and spending increases via the debt ceiling negatively impact CAT. Yeah. Yeah, CAT makes a lot of their money from government subsidization. So absolutely. It'll impact, not just CAT, but probably like deer. It'll probably have some effect on transportation. Maybe like railroads and stuff will get hit. Solar seems like one that would be impacted pretty heavily, even though the money's already allocated for that. Without any promise of additional spending, it could get a little tighter. So like N phase and FSLR May take a little hit from that. Government contractors aren't affected. Those will probably actually benefit by the increased military spending over the next 2 years, because it's just non-defense spending that's being capped, or well, supposedly frozen. $19 strike, GME cover call X62. Okay. I was gonna roll to like 616 and hope for some downs. Do you see downs in Jamie's future? I mean, it's mostly just index exposed. There's not a lot of shorts coming in. Um, I don't see any chance for more ups, but it remains very illiquid. Even the ETF FTD period really didn't free up very much liquidity, like a little bit, right? But you got to really zoom in. But we got a little bit of liquidity through that period, right? Through the peaks there, and a little bit here, but I mean, we're heading right back to like multi-year low liquidity levels. I don't think we're going to see any significant drops in price rapidly that aren't just in line with index moves, right? They need active fund selling to get liquidity, or they need to raise the borrow rate, right? They've got to short through the lending pool. I think those are the two options that are really available to them right now. And raising the borrow rate then increases long interest, right? Because it's such an obvious signal. So they may want to avoid that. Take the Burry bet and hedge private prisons. Is he still long private prisons? I thought he was just long like banks now. Like long every regional bank. Which, as a broad position is probably gonna be really, really good for him over time. But because even if one or two of those banks fail, the rest will recover, right? No, Jamie's earnings report isn't on 531. That's just an estimate. They haven't announced, as far as I know, they haven't announced the shareholder meeting date yet, right? I mean, I don't just use gamma charts to estimate the likely range for the day, right? I mean, the gamma charts are pretty easy. Wherever there's a lot of gamma, the price is likely to drift to that range. It generally the highest point of gamma will act as both like an attractant and a resistance. Um, but I'm also using like our options data to determine the daily range. I'm using the volume profile within our range. I'm using futures support and resistance levels. So I'm not I'm not just using those, but yeah, I mean the gamma chart I post every day. It's the high point is where the price is most likely to go. And it's also most likely to close under that like peak level, but those levels change throughout the day, so they're not a great way to determine where everything is going to end up. Is there a coffee ETF? Probably. Do you have any thoughts on Nvidia's potential to run again tomorrow for T+2? It could. I mean, it maintained its prices from earnings pretty well. So, whatever hasn't been burned off or hedged already, right? Which is probably a lot. I mean, volume was pretty high over the last couple days, right? So I would say that, yeah, given the volume on, let's see here, on the 25th, there's about 154 million volume, 71 million volume on Friday. There might not be a lot of carryover left. What would sector shift be? Already in tech and future global supply chain issues. Dividends attractive, but not if not beating yields. Seems like so much uncertainty. First and maybe only message. I mean, defensives are attractive. Anybody who benefits from government subsidies in the long run, um, because even with a freeze on spending, there's still going to be congressional approval to increase economic output if we hit a recession, right? So, if the Fed's job works, and they get inflation down to 2% or lower, which is more likely, um, the government's going to have to invest a lot of money in rebooting the economy, right? And getting everything up and running again. And when that time comes, obviously manufacturers and industrials, especially, benefit heavily from that. Commodities will benefit. So, sector shift is generally going to go to like things with significantly more defensible PE ratios, things that are going to weather a recession, high cash flow stocks, um, anybody who's going to benefit from government subsidy or defense spending in the long run, consumer durables, and consumer non-durables, because essentials, right? So generally sector shift moves towards safer value when it moves away from growth. Cat's fine. He's still going through a lot of hiding. Chasing Gamma Max is painful. 2 out of 10 might work sometimes, maybe. What do you mean? Can you go more in depth on how you manage overnight straddles in the morning? Do you set stops, cut the winning leg and re-enter, close the losing leg and let the winning leg run, etc.? I mean, that's kind of the standard method for managing a straddle, like an overnight straddle, is that you would close the losing leg and let the winning leg run and just take profits. That's fine. However, I found with our market being so choppy and in so range bound and choppy, that I can generally just leave the losing leg open, and provided I purchased enough theta in advance, both sides of it will go in the money. I mean, I look towards local resistances within our trading range, and I try to pick up my straddles kind of in the midpoint of those trading ranges. Um, but yeah, given enough time, I've had success with both legs printing. Like right now, I have 4,200 puts and 4,150 puts open on SPX that are both legs, like losing legs of straddle, right? And then I have 4,150 calls open, which are in the money. But yeah, they're not very complicated. You just sell them when they're green, and then hold them when they're not. Occasionally, if we move into like a new trading range or we like break through upside resistance, I'll roll up. Like I'll close and roll up. But that means that the profitability on opposite leg is already very high, like in excess of the value of the short position, right? I mean, seeing where the big deal on the gamma chart is and guess when and how price may move to that point. I mean, there's a lot more that goes into that, but on the upside lately, it's been very, the accuracy's been very high, right? Generally speaking, no, it's not, but is KHC looking decent at the current price? Their yield is pretty decent. No, I don't particularly like the current price on it. I was actually looking at it over here. I mean my buy-in target for Kraft Heinz is still like 32 to 35. Um I don't really I don't really see that changing anytime soon. If I could get it lower, that'd be cool. But yeah, this range is still preferred, and then it's not gonna have like a lot of growth, right? It's just something to chuck money in that's slightly worse than treasuries, and so why not just get treasuries, right? Like 2 year on treasuries is yielding 4.6, and Kraft Heinz, which unless you nail the bottom, is probably not going to see a lot of growth, is yielding 4.17. So treasuries are just better than this right now. Even I mean, even the I think even the 5 year is better than this. Well, it's not right now, but it will be. How's Lily looking this week? So Lily's been slowly breaking down from its peak. It does look like more calls sold off on Friday. Not a lot more puts came in, but the calls are selling off, so that's probably a good sign. I imagine as we get closer to 400, more confidence will pick up there. Most of Lily's stock movement is not based on its options chain, right? The collapse of Gamma Max is good for it, like it helps catalyze downside, but ultimately you need sellers and shorts to come in. If we get a pull down in indexes, I think it looks pretty good. I mean, it gained a lot of value very, very fast, so I still don't think that target at like the 371 range is out of the question. But if you're targeting the lower range of that, like sub 400, and you only have till June 16th, you may want to roll out for a little more time. Hey Greg, I can feel myself struggling with anything AI now versus FOMO. I keep wondering if some AI plays are legit or just rug pulls waiting to happen. Specifically C3 AI this week. I mean that company is kind of like a scam, right? I'm not really sure that they actually do anything. They've changed like the goal of what their company does and like their mission statement so many fucking times that they could really just be any industry, but they have AI in the name, so IV is high. If I had any interest in dealing with it, I'd probably short the fuck out of it. But it's profitable for spreads if your timing's good. So Tesla Gamma Max pumped up, but it's kind of flying away from the current stock price, which is not a bullish sign. Call Delta on the chain fell off, and dealer Delta Gamma or Delta and Gamma exposure are both falling off. It looks like it's peaking at resistance again. Um, Puts increased on Friday, calls fell off, so it's near another top. Obviously where it bounced is still in play. for a downside resistance, but it's probably not a bad opportunity to enter puts. I'll go over Tesla more tonight, but yeah, I think it's just like another entry. A little bit better than the prior one. The easiest way to play this is to just set stops when you hit the downside resistances. And then, if it bounces, get out, take your profits, and then wait for another entry. And a lot of this, like, it probably would have continued down had it not had so much QQQ exposure, right? Like there wasn't really anything bullish going on with Tesla this week. Yeah, treasuries can always be used for margin too. Agree, but still might pump irrationally. Which C3? Yeah, it could. I mean the IV is sky high, right? That's what that tells you. I've played bear call spreads on C3 a couple times. It's the IV is insane. I think you can. I don't know. I don't know why you wouldn't just buy them direct, but and I'm not actually sure how Fidelity manages treasuries. There's SPX 0 DT is ruining natural price realization in the VIX and options in general. I mean, they incentivize like the front loading of the majority of options positionings, right? So you're seeing far fewer long dated positions come in. I don't really think that they're ruining natural price realization, but they are creating like a lot of realized volatility while not increasing implied volatility by any significant degree. And they make it very easy to protect like sold put positions because you can sell massive amounts of puts and then buy 0 DTE calls and move like the index price so far away from your puts that you can then buy them back for nothing, right? Which is essentially like a net credit position with profitability on the call side. Like a calendar synthetic long. Tesla volume is growing and green candles wicking over the trend. Okay. But it closed below the trend. I'm not saying that there's not more upside room here. There is. I mean, but if you're buying a sufficient amount of theta, it definitely looks like it's topping out. At what point are we going to get away from this range-bound price action and actually have some sort of sustained downside move? What's the market waiting for? It's a good question. A pullback in earnings, a Fed rate surprise. I mean, we already have stagflation. Someone's eventually going to start selling, right? And then that's going to cause others to do the same. And we've had nothing but negative data for the last like 3 months, right? With, and we've basically just traded flat. So eventually, the accumulation of all of those negative data points will lead to something, but the market can stay irrational for a very long time. Can you look at Ennui? Yeah, still playing that. Looks like it's headed back towards its lower range here. It's at one resistance, right? I would say right now with like QQQ rocketing and China's reopening not looking super bullish, it's probably pretty likely it falls back to the like 125, 120 level. Not successfully. Steel's been faltering a little bit lately. Thoughts on Target with the woke discount this week? I think it falls to 133. You know, the last time it was at these levels, I bought it and then I got assigned on covered calls. I don't think I want to buy it at this level again. I think it's gonna fall further. It might fall like sub 130. You know, with consumer discretionary spending drying up, and we're seeing it not just at Target but at like Costco and other major retailers as well, then I would be. Could Wix technically be dark pools? No, it's very unlikely. I mean, the wick there on the 1 hour is just the price was higher in the intraday and then closed lower, and not as much volume was traded in the upper range. That's all the wick tells you. Yeah, I think Target could see some serious decline over a couple quarters. At least until consumer confidence starts to pick back up again, which probably won't be until we have some kind of improvement on the inflation front, which right now doesn't look super great. So yeah, I would say like over time Target can fall quite a bit. You could do a buy right, and you know theoretically you could do a buy right and try to play that. Um, I've done similar things in the past when I had like a long term price target. Like you buy the underlying and you write out a contract in the money for like 90 or 120 DTE, and you can capture the downside delta without having to worry about nailing the buy-in, right? And then if it like say it only drops to like 118, you can buy back your covered calls there, and you've netted the difference, right? Oh god, I'm gonna have to explain that to people over the next several months, aren't I? Oh, fuck me. The market is pumping because treasuries are selling off like crazy, and BlackRock needs somewhere to park their cash, so they're parking it in the S&P 5. Yeah, I mean, eventually, like the 8 companies that are propping up the market right now are not going to be able to sustain their current valuations, right? They can't. They cannot meet those growth metrics over time. So while they might be able to meet them in the near term because analyst expectations are very low right now, um, over time that rate of growth is impossible to maintain. I talked to Fidelity on Friday. They sell treasuries and they give 2-to-1 margin. So 50K in treasuries equals 100K in margin. Shh. That's a dangerous game, Darboyer. Have you compared Nvidia's price action to Tesla before? If Nvidia does finally break down in the future, do you think we could see similar huge price swings in both directions for a few months? Yeah, absolutely. Yeah, I think if any Nvidia experiences any sustained downside for more than like 3 to 5 days, its price will break down a lot. Um, once its ETF weighting starts to reduce and um, like those derivatives like start to come in and like you get the volatility shorts coming in, then yeah, it's gonna drive prices down. But it needs to be consistent, right? And a 2 day drop in the primary index is like barely enough to offload all the internalization. So it's very similar to Tesla. You need sustained downside in the market, and then once that happens, price starts to fall a lot more rapidly. Thoughts on TGT with the book discount? Okay. Well, I hope they start selling before June 16th. Listen, man, if you need to pray for your puts because your expiration is coming up, move your expiration, right? You as a homie, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord if you need me to add you to the country club.
Happy birthday, girl. Yeah. Yeah, we might have a chance, but we ain't got ropes.
Got a target in the 30s for what? I have it in my Vanguard account, so no stops on cover calls. I'll just go aggressive on CCs and capture what I can on TGT. Okay. I mean, you don't need stops, right? You just you wait for it to find support, and then if it found support above like here, I'll try to explain it in an easier way. Okay, so you're buying Target at like $138, right? And your price target for Target over time is like 100, right? So you sell $100 covered calls, netting 38 plus dollar premium, right? And then say Target only falls to like 110 and then starts to stabilize. Well, you still made $28 per contract, right? You can buy these contracts back and close them out, and now you own Target at 110 a share. So you captured the bottom, but you bought in early, right? Does that make sense? I knew my initial explanation was not going to be sufficient. Does the market have rabies? No. He posted a screenshot in the SPX Discord breaking down a portfolio by cyclical, defensive, sensitive, and fund. Could you expand on this? I don't know. It's just some fucking bullshit website that I use to track dividends. I was just fucking with Doric. None of that is allocated based on those stocks being cyclical or defensive. That's just an arbitrary rating that the program gives based on the beta of the position. So the more sensitive it is to index movements, the more likely it is to be included in the sensitive part. If its beta is cyclical, then it's put in cyclical. If its beta is pretty stagnant or inverse the market consistently, it's put in defensive. Funds are just any ETFs. I almost missed the stream. What's up, Pigeon Teeth? Are you thinking of a similar drop like Nvidia had last year, just more violent? I mean, that'll depend on the indexes, right? Like, Nvidia has become massively index exposed over the last 4 months. So, yeah, any significant downside in the indexes is going to significantly affect their share price. And then that downside, given a sufficient period of time, will start to pick up momentum. And frankly, Nvidia is a pretty scary hold if you think about it psychologically. There's people that are buying Nvidia, between 320 and 390. That's a really hard valuation to justify over time. And those people are likely to sell if the price of the stock moves against them in any significant way. So do you just sell the buy right at whatever expiration nets you the difference between current and target price? No. No, I sell the I sell the covered call at the expiration I think it will take for the price to get to the target price. So basically I'm buying into the position, then immediately selling the difference in delta on it. And then whatever price is realized during that period of time, that's my buy-in, right? It makes it a lot easier to time your projected bottom without, trying to just buy at the projected bottom. It also puts your money to work for you immediately, right? Because, if you're able to yield, 10 or $13 a share, that's 10% that you've made in that time frame that you otherwise would just, like, if you're just sitting on cash, which is what a lot of investors do. They're like, okay, I want to buy Target at like $98, right? And then they just sit on the cash to buy Target at $98 for like 6-7 months till it hits that price. Whereas, this way you're immediately putting the money to work for you, right? And then if the price of the stock goes up and you get assigned, who gives a shit? You just didn't get the entry you wanted. You get paid. You get paid the what you bought it at when it gets exercised. But if the price continues to fall, you make yields on that delta, and you can make quite a bit. GME annual shareholder meeting is on June 15th. Thank you, Hugh. Yeah, so and that's also the earnings date, correct? That's when they're going to announce earnings for quarter one. I just hate seeing a stock down and red in my account always. I mean, you can offset that. They should be the same. As far as I know, GME has always done its yearly meeting alongside its quarter one earnings, but I guess they could change it around, although I doubt they will. Are we just boomers now, doubting Nvidia, just like how they all doubted GME? No, I mean, I doubted Tesla for a long time, and Tesla lost like 75% of its fucking market cap. I don't think that makes you a boomer. I think it just, the the revenues that aren't there to sustain the price. So overvalued is overvalued, and it's just as true on Nvidia as it was on GME. If you'd shorted GME at any peak in the last 3 years, well, almost 2.5 years, you'd be up, right? A lot. So overvalued is overvalued, and there's always participants willing to take advantage of that. You're offsetting it, but it still shows that you're underwater on the shares. Who cares what the broker says? Take the money that you made and then average down the shares at your target price and increase your holdings even more, right? Like, I mean, it's the amount of gains you realize that matters, not fucking whether your broker says you're red or not. I just voted on the proxy stuff, and that's the date for the meeting. Cool. NQ just pumped. Yeah, a little bit. Some volume. Not a lot of volume. None of these are trading a lot of volume right now. NQ pumped and SPX dropped. So, fun. Yeah, futures are open all day today. So, any other questions? I think we covered GME. We didn't really cover Upstart, I guess. Upstart's liquidity is still very slowly collapsing. Obviously, upside in the market is going to stabilize its price or reverse its trend a little bit. But I think ultimately, it's going back down. There's still headwinds. There's still Fed rate increases on the horizon. So, the short thesis remains valid, if even though slightly less valid due to the most recent deal. So yeah, I think Upstart's going to continue down. Probably still sub 20, but we'll see. It may find some support at 20. I'm here now. You can start over. Thanks, Flama. Kitten's cool. He's hiding somewhere. When managing spreads, what range do you usually consider a defensive action, like rolling? Usually don't roll unless price is moved into the spread. Even then, I generally don't like to roll until it's confirmed. I'd prefer to hedge them. It's much easier than, and to hedge them, you just buy a call or a put at your sold strike, right? It's easy. You can set up conditional orders to do that as well. If there's like a big news change and I think the price action is gonna like turn around really, really hard, then I might consider like rolling up and out. Or just rolling up. Or well down, depending on which spread you have. Where are we in relation to SPX in the movie Month Python? Monty Python? Monty Python has a bunch of movies. Which movie? Any thoughts on Fubo? Kind of just boring until the next earnings? Probably. Any downward support target for Upstart? Now that you mentioned it. Yeah, $20, like 2050. That's where I'd look for our first level of significant support. If it breaks down below that, I think back to like 18, 17. And then obviously, as it becomes more and more illiquid, you could confirm further and further breakdowns. No problem, Eric. Later. Any thoughts on Fubo? Okay, yeah. What's on Fubo price this week? Yeah, I don't think Fubo is going to do anything very exciting. I mean, I sold a bunch of $2 covered calls on it for like a month out. I don't really think it's going back to 2. It's probably going back under $1.50, where I have even more covered calls. Is the SPX just a variable this week? I missed the earlier part of the stream. No, I think we're very close to the maximum potential upside range. Although I would say that the pump from last week probably still has another day on it. And and futures pricing right now would indicate that there's still a little more upside room there, right? So yeah, we could still move up. I mean, there's still a lot of short call interest at like 42.20, 42.25. Most, if not all, of the currently open call interest on SPX is around 4,200. So like between 41.90 and 42.10. We'll see how that changes going into tomorrow morning, but I don't think there's nearly as much upside potential as there is downside potential on it. But we could stay to the upside for another day or two while the debt ceiling thing creates a lot of volatility. Use stop regards and listen to Girk. Thanks, Bandstan. Stops are the best. They take all the thought out of what kind of loss you should take. And when you should take profits. What are the thoughts regarding the debt resolution? How long could the initial pump be sustained, etc.? I mean, there's a very good argument that the initial pump has happened, that it's already priced in, you know. Buy the rumor, sell the news. You know, if it passes, that's the outcomes are not beneficial to equity pricing. At 42.10 spreads on SPX on Friday, and only did not roll because of the failure to break futures resistance. But now I see how irresponsible that was. You probably should have hedged it over the weekend, at a minimum. If we aren't in Upstart now, is sub 20 just the entry moving forward? Or can we get back down in the teens? I mean, I'd love to buy it back below 15. I'll wait. I'll wait and see how far it falls. I mean, there's there's plenty of room for shorting, right? If you look at our previous levels, I think there's a very good chance that our liquidity goes all the way back, right? Especially if the Fed raises rates again and continues an unstable credit environment, which is quite a lot of downside. So yeah, it's very possible that, you know, when the price action does begin to collapse, it could go back to the levels it was at previously, or at least close to them. So just patience. I mean, don't rush into buying a position on it right now. And it could take a while to break down. You know, like after Jan, right, which was its last like significant liquidity realization period. You know, it bounced again on like in Feb and then trended down all the way into March, right? And then it didn't hit its low until May. So that's, you know, almost 5 months before it saw its low. There's plenty of time to wait. There's no rush, right? You could do the thing I mentioned earlier where you buy the shares and then just sell in the money cover calls against them right away. And then buy them back when you think the low has been realized or when the price action is going to turn around. That's one option. But you could also just sell CSPs and make income during the same period without tying all. Well, I mean, you still tie up a lot of cash either way. My futures data is super wonky right now. I have a position that's up, but I don't know if it's accurate. How's your data? Should be real time. Let me make sure. No. And mine's not real time either. I don't know what the fuck's going on. Is it an issue with CME? Oh, it's those are both like an hour old. Yeah, I don't know what's happening. Are Upstart buy rates worth it if you have no shares? I mean, yeah, you could also just buy puts, right? I mean, the buy rate like that means that not only do you want to own Upstart over the next several months, but you want to possibly get a discount on the current price, right? So, you know, there's some check boxes there that need to be filled before you take a position like that. Also, you can get fucked, if say you're like, I want to buy Upstart at 18, right? And you buy it now and you sell the $18 covered call for like 90 DTE, and then Upstart falls to 13. Now you're underwater $4 a share. So there's some risk. You have to be pretty good at defining that target price. Remember to support the stream. Hashtag not a mod. Don't use a double negative there. You're absolutely not a mod. Can you touch on Baba? TA looking like for rips? Is it? I feel like confidence in the Chinese market's waning. Um, there might be a bounce here. I don't know about rips, but maybe back to like 85. It's not a terrible range. It's not great, but it's not terrible. I don't think the company is in a great position, and I don't think investing in emerging markets is a great idea right now, but I have most of my June position out in $21 cover calls for June 16th. You think we go below that by then? Or should I make peace with assignment if I decide not to roll? I'm a little conflicted. Well, we have SLD before then, so sounds like you've got time to make the decision. Do you set your credit spread stops at whatever your credit amount is to eliminate losses? Well, most brokers don't have stops for credit spreads. But yeah, you can do that. You can just close them. It generally requires active management or conditional orders. I just want to say thank you for spending your day off with us. Wondrous Cold King, we love you, and thanks Gilgamesh. I appreciate it, man. Happy to. I gotta write all this shit up tonight anyway. There's quite a lot of interesting stuff this week, so yeah, no problem, Hugh. All right, guys. Well, I guess I'm gonna take off here. Sorry about the late start. But I gotta get going. I got somewhere I have to be by like 2:45. The last two SLDs, the index prices dropped super hard the week after SLD. Has something changed? Possibly. Well, so the March or the April SLD fell like 130 BPS by the end of the week. And then realized like another 200 BPS of downside the following week. May's SLD, however, didn't realize any downside until after the fact. Now, the haircut occurred in between those. That may have had some effect. It could also be how people are leveraged in the market, right? Depending on if their margin is long or short, and like where they need to deposit and add. It could also be that they're just not making large margin deposits right now, because all of their margin is being tied up buying 0 DTE calls. QQQ looks near GM. I currently have June 30th 340s. I'm wondering if that money would be better rolling up if we pump tomorrow, or would you just hold? Um, hmm. I have some SQQQ positions and I have some QQQ puts. It is very close to Gamma Max. I don't think 340 is out of the range. You could always average down too, or you could buy some more nearer the money, right? That way, if you don't hit your target, you have some like say you bought like 345s for example, and the price only fell to 342. You'd make some profit off the 345s and you'd get out of your 340s a little closer to break even. Yeah, you don't always have to just keep buying the same position. Sometimes you can buy new positions. You'll see me do that on SPX a lot. Like if it moves out of the range I'm targeting, I'll just buy some more closer to the money. So if this was like my initial range, and then the price falls, but it doesn't fall enough, right? So say it falls down to here, then these will capture profits, right? And that will offset losses from these that end up out of the money. And I can just close the whole position on the drop. Usually that's kind of automatically done for me because I'm carrying those straddle legs overnight. So I don't really have a lot of management to do on that side. Netflix still have some downside potential. Scalp profits a few times, but now about break even after last week's pump. Possibly. It also has some upside potential here. So, like it hit the prior, I think it was the mid. My previous chart got deleted, but I think 352 was like the mid PT for the like bear call spread with a put. Um, I got stopped out of those. I think last Thursday, if I'm not mistaken. But probably a similar opportunity coming up here after this rise to like 378. Although I would make sure that it doesn't. It's very similar to Tesla in this regard, right? It broke resistance but closed below it. So I would probably wait to see if tomorrow pushes through resistance and then fails. But you want to confirm the failure of this resistance, I would say, before entering a position. And that means that the upside's pretty open to like 385. Entries at and above 385 would be better. Okay, that's enough. Thank you guys so much for tuning in. If you have any questions, you can ask me. DM me over on the Discord. I'll be around later tonight. And then Pickle's pick should be out probably around like midnight to 2 a.m. So thank you guys so much, and I'll see you tomorrow. Enjoy the rest of your weekend. Have a good one. Later.